Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good evening. Ira Epstein of Linn & Associates with your financial market update for this Wednesday, the 20th of September, 2017. We're about 4:50 p.m. You know, in my other updates, I think I said Wednesday, September 19th. I'm sorry. I went to the eye doctor today, and I had to start taking drops first thing in the morning. For those of you that look for my morning update, these written ones, I couldn't even see the camera, let alone try to do it. Went to the doctor. I'm seeing blurry the whole day. It was a son of a gun day for me, and I have one more of these to go. You know, you get a little older, and the eyes start moving on you. So today we have a market where you're up again. For the week, you're up 160 points, and we had the FOMC. So yesterday we had Donald Trump's speech. Today we had other countries coming on, of course, blasting him. You'd expect that to take place. Then we saw Miss Yellen, and she did exactly what's been telegraphed. Not one step different could I find than what the market was expecting. They're going to start rolling off the balance sheet. They're going to try to get approximately, I keep hearing numbers from $300 billion to $600 billion in the first year of a roll-off of the balance sheet. They're going to try to get down, without saying a real target, maybe to the $2.5 billion from $4.5 trillion to $2.5 trillion on the overall Fed balance sheet. They don't want to let that be disrupted. They don't really want to make that, if you will, a tool to run interest rates. I'm talking the runoff. They really still want to use the Fed hikes. With that, she also said inflation is just still missing. Questions are coming from people, of course, with this word transitory. When does transitory end? And the Fed can only tell you what they see. My guess is at the end of the day, by the time Asia digests everything, goes back to Europe and to us, we're just trading the normal market, back to thinking, will there be a December rate hike? There's about a 66% chance right now with the current information that there will be. The Fed said today that they're talking of 3 hikes in 2018, 2 hikes 2019, but then we had the bad piece of news. They're not looking for 3% GDP. They're stuck in the mid-2s, and that is not a strong number. So you're going to go back, like I said, very quickly to all the other information. Now, as you can see, when we take a look at a daily area chart of closes, this market was up today nicely, up another 40 points. It didn't get shook by the Fed. You have an outside day up. When I see an outside day up, the first thing I look at is on the charts, I either mark it actually or I mentally and say, that low should not be taken out in the next 2 days. If it is a sign the market has trapped the bulls there, and the odds favor that this market's going to fall back in price, maybe to the 18-day average of closes, which is 21,982. That's quite a ways. I'm not saying it's even going to happen. I'm giving you the what-ifs. Let's assume the market wants to continue rallying. Well, I look at where the Bollinger Band is, and it's 22,418. So from here, the market can rally up, let's call it another 700 points or so, right? 22,4, no, it's not 700. 22,418 is another 100, not even that, 50 points before it runs into that Bollinger top. That's about what it is. So you've got to keep your eye on that low. Momentum-wise, you have an embedded reading. So a couple of things. Number one, regardless of the embedded reading, I don't like to see a low of an outside day taken out. However, in my hierarchy of things, until this red line closes under 80, I say that this market will be bought on all the breaks. In the S&P, it's the same thing. Outside day up, embedded reading. You got the higher lows, the higher highs. Next target, 25.19. Market's still looking bullish. It's absorbed the Fed, hasn't done poorly. The NASDAQ fell back to the 18-day average, lost its embedded readings. Let's talk about this. This is yesterday. And I had mentioned yesterday to my subscribers, I said, folks, I watched that intraday low. You had been losing that reading. Watch out. You may be going back to that 18-day average. And if you get my subscription, you know I did write that. I can prove it. And that's what you did. Now it's going to restructure. You've got a higher high and a lower low. There's no trend. You're near the 18-day average, literally just above it, and you've lost your embedded reading. The only day you can get it back is with a big time up close tomorrow to make it re-embed tomorrow. It can't do it tomorrow. It has to go through the whole process again. The Russell kept its embedded reading. So one market lost it. Is it because of Facebook and the Fed looking at those actor ads that were bought about the election? Is it about Facebook not having the right tools in place to stop those type of events? Could it be they're just so big they get picked on? I don't have any of those answers. But since that's happened, the NASDAQ has gotten weak. Also, maybe Apple's not helping the market that much either. There's a couple of things there. But you have these other markets, they're still very much in uptrends. The VIX is very much in a downtrend, and you are getting here a bearish crossover where the 18-day is getting under the 100 again. Bollinger Band, 947, reasonable target. Embedded reading, still bearish. You go to TLT. These are obviously the Treasuries, and this is the ETF for it. Market right down where I want to see it into the lower Bollinger Band, stops literally right on that number and comes back 60 cents. That's pretty good. Oversold, be a little cautious here. What about the bonds? Went right to the lower Bollinger Band. It too ran into support down here. So the question that you should ask yourself is, now that the Fed's out of the way, and you've taken interest rates from 2.06 to 2.228 roughly, is that enough for the market to say, okay, I've seen what the Fed's action is. That doesn't mean we're going to keep marching this higher and higher in real rates. That's what you have to ask yourself, because that's what the chart is asking. 10-year notes, you can see. By the way, when I was talking these interest rates, they were for the 10-year, not for the bond. 10-year note, you can see just what it's doing, oversold. I think that's a pretty strong move to the downside, and now I think the event is over. Dollar index, can you get up to the upper Bollinger Band? You made a run today, just missed the lower band by 7 ticks, reversed up on all the information of the day about the Fed, outside day up. If you take today's low out, be careful. That could be a sign that this market is in trouble. But more than that, I see sideways action suddenly. And that's what I think the market's fighting. There is no uptrend, there's no downtrend. It just looks like sideways action. Same reverse thing happened in the euro. Made a new high today, got up to 120.92.5. The Bollinger Band's 120.97, and then let go to the downside, hitting 119.17, just shy of the lower Bollinger Band. Momentum down, but not a trend. You're caught in that sideways action. This gets to be where the markets get very, very interesting in how they're going to play things out. In the Aussie, you get a big short covering rally all the way to the upper Bollinger Band, and you give up most of it and come back and are close to that 18-day average of closes. But more important to me, stuck in the Bollinger Bands. The markets are not trending right now. For whatever reason, those currencies aren't trending. You are trending in the yen. You still got the lower highs, lower lows. You're running the lower Bollinger Band, and you're embedding the yen to the downside. When we look at WTI, it's got an embedded reading. It's bullish until this red line is lost. We are up to 50.69. We talked here that I thought that these charts could carry it to the 50 to 52 level for a lot of resistance. 51.40 is the upper Bollinger Band. So I've been watching where those bands can go each day, and that's the only way that I came up with that number. The trend is up until you take out 49.73 and or lose the embedded reading. Same in the gasoline. If it wants to move higher, 163.19, lose the embedded reading. I think you go back to the 18-day average of closes. And the upper Bollinger Band, that black dashed line, has already proven too much for the nat gas. You'll notice it was overbought, no embedded reading. It got thrown back already on it. But where did it try to find support? Old resistance, which is the 100-day average. See it here? These challenges? That becomes support on the way back down initially. If it gives ground, then the 18-day average of closes. I do want to remind you about my market research and how you get it. And this is how you get it. This is my phone number, and you go to our website to see it. Now, what I try to do is start everybody off on a regular basis with a cup of coffee. I wish you were with me so I could give you the real cup of coffee, but it's here. And then I walk you through charts every morning. I spend a good 15 minutes on 40 charts, and I do them the same sequence all the time so you can skip along the recording to what you might want to look at. I'm throwing out trading ideas left and right. Why? Where the stops are, the reasons, fundamentals that I've written about already for the morning update, really getting you ready for your morning trade. That's the idea here. If you haven't tried it, it's a great way to start your day. If you have tried it, it comes with my written recommendations, twice daily oral updates, special updates as I put them out. My writings look a lot like that, writing about the fundamentals, then in green buy, in red sell, what you do with the markets all over. How do you get all this? Well, it's really simple. You can call us. You can go to our website. If you haven't tried it before, I want to give you a free trial. You can click up here for your free trial at any time. You'll see an icon on YouTube, or underneath us it says click here for a free trial. Barring that, if you want to subscribe, just go to my website under the word Ira's Research. You'll immediately see where to do that, and that's at www.iraepstein.com. You have a good day. Talk to you all tomorrow.